Alright, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today we are going to be going over a little bit into my month of September, how it has gone so far. We are going to be going over the updated strategy document, so for those of you that don't know, you can download our strategy that we use in the markets for completely free below. And then we're going to talk a little bit about our data collection and our equity curve. But to preface the video real quick, number one, first thing you may notice here, our equity curve is back at all-time highs. For those of you keeping up, we did have a fairly negative month in August. I was about -1 RR down in total that month, which of course, as we talked about, is just part of the probabilities as a trader. In fact, if you look at my kind of last 2-month period, it's been fairly slow and stagnant in growth overall. And then we have had an absolutely killer start to September. We're only about a week and a half in, and I have 4 winning trades, a few losers here and there. But most importantly, when August finished as a negative month, did I change the plan to make it suddenly profitable again? Did I tweak any rules or change the way I trade it? Of course not. This is just how the probabilities work in trading or in any asset class or business. You are going to have slow months. You are going to have great months. You yourself need to be mentally strong enough to push through those losing months to get around to the great winning months, not change what you're doing, keep the strategy the same. Another thing you may notice as well, I tried to remove the dollar value of my account and change it to % instead. I find it's a little bit more helpful and easy for some of you to visualize your own accounts and your own returns, removing my personal capital and value from the trades. And we will scroll to the bottom now. We can see that September has been absolutely killer to start. We are literally 1.5 weeks into this month using our 4-hour trading strategy. We already have, I believe, about 11 trades. We have plenty of active ones as well at the moment. And you could see we already have 4 winning trades this month with only 4 losing trades, which, as you guys know, with a fixed 3 risk to reward like we use, that is a total gain of about 8 RR or about 9% on the account total here. Now, before we go and dive into the actual trading document, I do want to point this out to some of you. A lot of people have this idea that trading the 4 hours is very slow paced. Keep in mind, I only spend about 10 minutes per day on the charts actually trading. But look how many trades I have in this week and a half of the month so far. So for those of you day traders that are nervous about making the jump to the 4-hour because you think it's going to be boring or very slow, I have just about 1, if not 2 trades every single day of the month so far. And for many traders with a more aggressive approach using our strategy, they may have multiple trades per day on different trading pairs. It's the way that we trade and utilize our strategy, which we'll go into in a little bit. But keep in mind, a lot of you day traders who may sit during a 2 or 3 hour London or New York session period for your trading plan, I only trade about 10 minutes per day, but still keep up, if not have more trades than a lot of day traders I see with their intraday strategies. I want to point that out because I do know it's a common misconception with 4-hour trading. And without further ado, we will hop onto our actual trading document that you can download for free below. You go in the description, you click the link, it'll bring you right to our website, and we have this whole document for completely free. This is the exact trading strategy that every single member in our community trades. It is the most data-backed strategy on all of YouTube. For starters, we have about 61,000 trades of data using this exact 3R trading strategy. And on top of that, we have about a 35.4% overall win rate. And this includes the people who are brand new and still learning our strategy themselves. And using a fixed 3 risk to reward, if you have a 35.4% win rate, fixed 3R, over about 250 trades for this example using 1% risk, you can see the consistency of growth here over the long term and how powerful this strategy can really be. I understand there's this perception in the smart money space nowadays that you need to be making 10 risk to reward, but these strategies lead people to years of consolidation without making real trading income. Our main goal at Simple Markets is what is the fastest we can get a new member to a funded account and then to a funded account to actual real tangible income through payouts. This is what we completely build our community on. It's not about flashy gains and returns and profit. It is about what is the easiest way that a trader can be brand new and then start making tangible income as fast as possible. The fastest we have had in our community is just 2 weeks to getting funded. Because we give you guys the exact strategy we use, it's proven with a significant amount of data. You have 3 coaches over your shoulder helping you, reviewing all your trades, and then you have a community as well around you sharing their own trades that they're taking. It is truly the fastest way that someone can go from a beginner trader to profitable and actually making real trading income. It is why we have the two other coaches that we do. Sven and Andre are absolutely fantastic at their job. I have personally known both of them for over 4 years now in the trading industry. Hopefully you guys can tell how proud I am of what we built with Simple Markets, but I will dive into our strategy now and a little bit about the watch list and time. So this is of course a recommendation, as we say above. In my personal opinion, I find that more pairs can typically be better because once you get comfortable with the trading plan, it takes only about 10 minutes total per day to kind of brush through your pairs and look for the trading setups available. But very basically, we just kind of have a few USD pairs, pound pairs, euro pairs, and then other pairs as well, typically AUD or NZD pairs. We try to avoid very, very minor trading pairs, or exotic pairs as they're called in the Forex space, as they have a lot more volatility and higher spreads. The more pairs you tend to have that have proper spreads and volatility, the better you will do in the long run because you'll have more trading opportunities. And as you guys know, we push the idea that more repetitions will lead to more gains in the longer run. Now, the entry checklist has stayed the same since this document has been updated. Simply looking, is the higher time frame bullish or bearish? This is more of an optional rule. I tend to follow trend myself. I know we have a lot of traders in our community who don't really care for it as they just work on those repetitions and higher frequency of trades. But myself, I just kind of very briefly look at a chart. Is it going up or down? And it helps me be more confident in my bias. The second step here is a sweep on liquidity. Now, the significance of the sweep can vary. More aggressive traders may take weaker sweeps for more trades in a lower win rate, but more conservative traders can focus on the highest quality liquidity sweeps for less trades but a higher win rate. Now, you might ask yourself, JB, why would anybody want a lower win rate? Well, because with a higher frequency of trades, you will actually make more profit in the long run despite the lower win rate. This is a great example for traders who test their trading plan and maybe have 20 trades in a year, and out of the 20 trades per year, 15 win, and they go around on YouTube boasting that they have an 80% win rate. That's just simply not how win rate works. You can flip a coin 20 times and get heads 15 times based on the probability. That does not mean that a coin has a win rate of 80% when you choose heads. Of course, we all know it is 50-50. It matters the more repetitions in the longer term, you will move closer to that probability. So win rate is not everything in trading. Step 3 is going to be a displacement. Now, this is just a strong break of structure in your direction of the trade, creating a fair value gap when breaking structure. And then last but not least, we love to enter on the 75 fib of the 4-hour range, but the 75% helps keep things super consistent and make sure that every single trade has no ifs, ands, or buts on where we should have entered. If we miss the trade, we understand that it is part of the probability and that nothing should change here. It is very mechanical in nature. You guys know we target 3 RR and risk 1% per trade and break even at 1 R. Of course, these rules are optional. I myself risk 2% per trade. And then we have just an example sheet of data here showing the 50,000 or more trades back tested. This is just a 2,400 trade set of data with a fairly reasonable or average win rate for the plan, showing the long-term consistency as well as the gains year to year being almost 450% return, despite this last year not even being a completed year of testing. We have a few trade examples. We're going to brush right by that, as well as takeaways as well. We're going to brush by that because I want to take some time to dive into some of my trades for this month of September. So here we are with 4 trade images that I pulled up. I grabbed 3 of the winning trades from this month, as well as just 1 losing trade. I unfortunately won't have enough time to go over every single trade that I took this month, but maybe in another video I can do a more in-depth review of each individual trade on my TradingView charts. Now, the first trade we're going to look at here is AUD USD. Super basic and super simple. As you guys know, step 1 was that higher time frame bias. For me personally, I just hopped on the charts and saw that we were moving fairly bullish, breaking structure to the upside, creating higher highs and higher lows shown by the highlighter tool here. And then we have to look for that sweep on liquidity, which of course this consolidation range represents liquidity in the market. We push right through, grabbing that liquidity, and then break structure very aggressively to the upside, showing that step 3, which is displacement. Then we just simply take our fib from the low to the high of the range, we slap it on and enter at the 75%. And this one was very quick and easy. We tapped right in and very quickly started pushing right towards TP for an overall gain of 3 RR. Keeping it as simple as possible here. Once again, I just very clearly saw that price was trending downward. We're having lower lows and lower highs overall. I have my little highlighter tool range here to help some of you guys visually see it. We have a great sweep on liquidity here where price is just once again consolidating, creating a lot of orders within this general range, low or high. Price works its way up, we grab that liquidity, and then we very, very quickly and aggressively break structure to the downside, once again giving us that step 3, which is displacement. There was a fair value gap in the range as well, which of course enforces step 3, which we need that in each and every trade. Once again, a very simple and easy one here. Price just worked its way back up to the 75%, tapped right in for us, and then ran right to TP. And then once again, another fairly quick trade here. Price was just trending bearish once again. We broke structure to the downside. We have our highlighted range here with a sweep on liquidity above this candle high. I get this question sometimes. When price is heavily trending like this and clearly bearish, I do not mind to see the craziest sweep on liquidity of a very significant high or low. Number one, because there isn't really any highs or lows here that would be that significant, but more importantly, understanding that liquidity does rest below multiple candlestick highs or lows in the market, especially when operating on such a higher time frame as well. We grab that liquidity candlestick high, we break structure downward with the fair value gap. Once again, just throwing on our Fibonacci from the high to the low in this case. I changed my template up a little bit so we have this writing here, just makes it a little easier, hopefully for some of you on YouTube watching that may be newer to trading. We tap right in at the 75%. We just hold that trade right to 3R, and once again, another 6% gain on my account. These 3 trades alone is about an 18% gain, but here we will look at a negative 2% gain where I lost negative 1R. Once again, just very quickly and easily looking, we are seeing lower lows and lower highs, so I wanted to go bearish here. We have a sweep on liquidity, once again of a couple candlesticks on the 4-hour time frame. We very aggressively grab that liquidity and then break structure to the downside. We have a huge fair value gap, candle close below the low, everything checks off for me here, so I set the order once again at that 75 of the fib. Now this one, of course, some people may be upset looking at it. Me personally, I don't really care. I just understand it's the probability of the markets and this is going to happen more times than not. Price works its way up to our entry, taps us in, very quickly reaches our stop loss and wicks that area, and then we very aggressively run towards our 3R take profit. We had the right idea, we had our great entry model with our plan here. We just understand that yes, this is part of the probabilities in the market. You can get swept out like this and then run your take profit. Don't get upset about it, don't beat yourself up over it. Keep trading, trust that long-term edge, it will work out in the longer run. And as you can see here, it has been for September. We had a losing month in August for the first time in over 365 days for myself personally. I have not had a losing month since early 2024, but I understand it is part of my edge and probability. I kept trading and September has been a killer month so far, not only wiping out all of the losses in August, we have significantly reached all-time highs now and beyond, having one of the largest growth or expansion phases on my trading curve since May. Alright, thank you guys for watching. I hope you learned something new today. If you did, like the video. It helps me understand what content you guys like to see more than others. As always, if you have any questions, my Discord is on the screen in the intro and the outro of videos now, so you can shoot a message to me. I answer every single message I get from subscribers. No question is a dumb question. Everybody has started somewhere in trading, so feel free to reach out. I will help you out, I promise. Thank you all for watching. I hope you enjoyed the video, and I will see you guys next Monday.